Dividend stocks are paying higher yields right now than they have in a long time. In this video, I'm going to go over 6 cash flow king dividend stocks that I like for 2023. We have an awesome video today, and there are some really important things we are going to go over. But looking at the market, especially in crazy economic times and, volatile market situations, dividend stocks end up being some of the best stocks to own, because assuming that you're actually buying companies that aren't going out of business or probably won't cut their dividend anytime soon, you'll get almost guaranteed returns in a time where the market is just all over the place. And that is a huge advantage to have, especially in this economic environment. Now, there are a couple important things I want to talk about, and there's one thing that is very important in the sense of why right now might be one of the best times to buy dividend stocks. But before we could fully go into that topic, we have to demonstrate a simple example. So in 2020, the economy was crazy, as we all know. In 2021, mortgage rates bottomed in January of 2021 at around, you could say 2.6 to 2.7% for a 30-year mortgage. That's insane. And then shortly after, in 2022, mortgage rates popped all the way up to 7%. You're probably wondering, what do mortgage rates have to do with dividend stocks? Don't worry, you'll find out in just a second. But the main thing is that a lot of people who are, signing mortgages now at a rate of 7% really wish they would have locked in their yield when it was, or their interest rate when it was only, let's say, 2.7%. And, just for you guys who don't know, a 2.7%, interest rate, in the difference between that and let's say a 7% interest rate is insane. So a 2.7% mortgage rate will equal a monthly payment of $1,200 on a $300,000 mortgage, where a 7% interest rate will equal a monthly payment of $2,000 on that same mortgage. So the rate plays a huge impact into the total cost in return. So the reason this has a very strong connection to dividend stocks is because with dividend stocks, you actually lock in your dividend yield when you buy the company, assuming that they don't cut their dividends. So for example, right now, if we look at Walgreens is paying, let's say, a 5.5% dividend yield. That's awesome. Assuming that Walgreens does not lower, their dividends. So if we look at Walgreens right now, we can see that they're paying an annual dividend of $1.92 per share. Assuming that they do not lower that, even if Walgreens stock shoots up to, let's say, $50 or $60, and it seems like their yield fell to, let's say, 2 or 3%, you will still have your 5.5% yield locked in. And guess what's happening right now? Basically, dividend stocks are trading at, or paying some of their highest yields that they've paid in a long time. So it's similar to that mortgage example. We had a lot of people who wish they locked in mortgage interest rates when they were low. I have a feeling that we're going to have a lot of people saying, I really wish I would have scooped up dividend stocks when their yields were a lot higher. So in this video, I'm going to go over some of my favorite dividend stocks for 2023. So with the first one, we have good old HPQ. This is actually a stock that Warren Buffett bought into somewhat recently. HPQ, or HP, we can say. Basically, right now they're paying around a 3.6% dividend. And just so I can introduce some of the metrics I'm looking at the bottom, this first metric represents, their dividend yield for the most recent quarter. The second metric right here in the yellow represents their dividend payout ratio. Basically shows you how much of their dividends relative to their profits or earnings are being paid out. And then the last metric is the dividends per share, which just shows you, I guess you could say the exact dollar amount that they are actually paying out in dividends. So for example, this last dividend was 25 cents per share for HPQ. So just so you guys know, just to have you guys filled in. But anyways, looking at HPQ, Warren Buffett bought into this company around last year. They are a relatively slow growth company, but that's just how a lot of dividend stocks are. You won't see a company that has revenue growth at 80% pay a dividend most of the time. And if they do, you should be a little bit worried at that. So what I also like about HPQ, they have a lot of free cash flow, especially relative to their debt. which is awesome. And what I like even more is that HPQ has been buying back a ton of their shares over the years, which puts a ton of upwards, I guess you could say, buying pressure, just upwards pressure on HPQ stock overall. So you combine that with a decent dividend, it's not a bad candidate at all, especially given that Warren Buffett has, he's in this company as well. So that's awesome. Of course, it's not like one of those crazy dividend stocks that pays, let's say a 12% yield. A lot of times in those situations, you'll want to ignore those types of stocks anyways. So HPQ is definitely one of my favorites. Another one that I really like is Citigroup. So this is actually one of it's probably my favorite, like in my top two. Looking at Citigroup, right now they pay around a 5% yield. Their payout ratio is around 30, you could say 30% or so. And their dividends per share around 51 cents per share per quarter. So that's awesome. Looking at Citigroup, they are a bank stock, as we all know. Banks, what I really like about them is in this economic environment, we have interest rates rising. That does tend to benefit bank stocks, which is a good thing. Warren Buffett has been buying into Citigroup. And in my opinion, they're just at a great price level overall. Even if we look at Citigroup relative to their price to sales ratio right now, it's towards the lower end of its historical range, which is a good thing. And I just like exposure to banks and specifically Citigroup in this situation, especially the way it is valued relative to its competitors. So Citigroup is definitely one of my favorites going forward. I think it's at a great price level. Plus, when you combine that nice dividend with it, I really like it. Another one I have on my list is AT&T. So this company has had a wild past couple years. They did end up cutting their dividend last year, and they did have a spin-off with Warner Media. They have a decent amount of debt, but right now they're paying a dividend yield of 6%, which is pretty good. So I do like that. Another thing I do like about AT&T is that, in my opinion, they have a decent recession-proof business. It's not like, if we go into like a nasty recession, it's not like we're going to see people, canceling their phone bill and internet. I feel like at this point, AT&T is in a pretty good position in that side of things. Like I said, they do have a decent amount of debt, but it's definitely, it can be justified scooping up this company given that they pay a 6% dividend yield and given that the current valuation that they are trading at. If we look at AT&T's price to sales ratio, even though their stock hasn't moved too much over the past 20 to 25 years, when you adjust that for dividends, it looks a lot better. So check this out. So if we look at AT&T's normal stock chart from, you could say, maybe 2001 till now, it has basically just been extremely flat. However, when we adjust for dividends, it is a completely different story, and AT&T is actually not looking that bad. So basically right now with AT&T, it's not like they're, like a crazy, it's not like they're at like a crazy deep value discount right now. But with everything being said, I don't think that they're at a bad level and they can be justified. So they're another one that I definitely have on my list. Another one is WBA or Walgreens. So Walgreens, basically this company also pays a pretty decent dividend yield of around 5%. Their dividends have been increasing nonstop, like a lot of these other companies have been. What I like about Walgreens is that they have been buying back a decent amount of their shares, which is a great thing. We can see if we go to, let's say, the annual chart. Over the years, they have been buying back a good amount of shares. I would definitely like to see that continue, as that would put a lot of, continued upwards buying pressure on the stock. So we could get like a stock appreciation and the decent dividend yield. That'd be awesome. They also have a decent amount of free cash flow, which is something that I like to see, which is good. Again, Walgreens, I would like to think that they are a somewhat recession-proof business. And they're also expanding more into like these I guess you could say like pop-up pharmacy type things. So they have a little bit of growth sprinkled in. Of course, it's not like we're going to see Walgreens 2x their revenue or, double their revenue within the next couple of years or so. But I feel like they're like a decent value play that also pays a decent dividend. Another one that's on my list is Intel. So Intel, this company has also had a wild past couple of years. Just in like 2021, the stock was at like almost $70 a share, which is just insane. Right now it's around 27, just under that. They pay a dividend yield of around 5%. Their dividends have been increasing constantly, which is a good thing. Now, their free cash flow has taken a little bit of a hit, which is a little bit of a worry. Another thing is that they have been reinvesting a lot into their new chip plant. And another thing is that the semiconductor industry as a whole has slowed down a decent amount over the past year. But, you know, semiconductors and chips are basically in everything nowadays. And especially given how much, you know, AI and crypto and all that other good stuff is set to grow in the future, those heavily rely on semiconductors. So I don't think that Intel is necessarily in a bad position. I know that other companies like AMD and Nvidia have a lot more hype to them and a lot more probably like explosive potential revenue growth. But then again, you know, with dividend stocks, they're not always looking for that crazy explosive revenue growth. We're looking more for like stable companies that we have a high degree of certainty will pay constant dividends and even increase them over time, and that won't go out of business. So with Intel, I feel like this is a potential play to look at. Especially at its current level, right around like $26 to $27 a share. Even if we look at Intel from like a valuation perspective, their price to sales ratio right now has been lower than it's really ever been, you know, so that's definitely a good thing. You pay a lower amount for every $1 in revenue Intel has right now than you would have ever in the past. So that's definitely a good thing. So I definitely like it given the current situation. With the last play, I will warn you, this one is a little bit of a wild card. So MO, this one pays around a 9% yield. It's pretty big. MO or Altria is a company that realistically won't see a ton of revenue growth going forward. At the same time, I don't think everyone's going to magically quit cigarettes overnight. So I feel like they'll have somewhat stable revenue going into the future. You know, like I said, they're a low growth company. What I do like is that they have been buying back shares continuously, which is a great thing, and that will definitely put upwards buying pressure on the stock overall. They do have more assets than they do liabilities, which definitely is a concern. So, you know, I don't like to see that. But even in the worst case scenario, even if they were to cut their dividend, the yield would just be insane. So even if they were to cut their dividend yield in half to like repay debt or something like that, they'd still pay a really high dividend. So overall, it's definitely not a bad play, especially given the yield that it's paying. So here are my top 6 stocks for dividends for 2023. Let me know some of your favorites for the year and just going out in the future. One thing I want to talk a little bit more on is that with dividend investing, we're always trying to balance, you know, as high of a dividend yield that we can get without buying a completely shit company. So like you can easily find, you know, 20 stocks right now that pay a dividend yield higher than, you know, 25 or 30%. But when you have a, you know, let's say a company that's paying supposedly a 60% dividend yield, realistically, that company is either going to cut their dividend in the future or they're going to go bankrupt. So, you know, of course, you can easily find companies that appear to be paying, you know, astronomical dividend yields, but at the same time, those companies have a very high chance of going out of business and stopping their dividend. So, you know, we're just trying to balance, you know, good dividend without buying a shit company. And I think that these 6 stocks that I shared today have a great balance between the two. A lot of these companies are very established and at the same time pay pretty dang good dividends right now. So I definitely like them in that sense. A couple other things I wanted to highlight really quickly, specifically with Intel, WBA, and MO. Basically, these companies, in terms of like price to sales ratios, are very, very low right now. WBA or Walgreens has its lowest price to sales ratio basically ever right now. Back, you know, for most of its time, it was trading at a price to sales ratio of anywhere between 1 to, you know, maybe like 0.6. So like for one, so just for those of you who don't understand, if a company's trading at a price to sales ratio of 1, that means for every $1 in sales or revenue that this company brings in, you would have to, you know, pay $1 to buy that $1 of revenue. Right now, You could buy $1 of Walgreens revenue for only 24 cents, which is cheaper than it's basically ever been. So I definitely like it in that sense, and that's a great thing to have, especially when you combine the what appears to be low valuation with a good dividend yield going forward. So let me know your guys' thoughts on some of your favorite dividend stocks for 2023. If you guys liked the video, make sure to subscribe. I post brand new videos all the time. And make sure to check out that first link in the description and the comments down below. You'll get access to some of the best software to analyzing stocks, to buy and hold. We also have calculators where you can calculate your own price targets for any dividend stocks, or honestly any other stocks out there. It's an awesome software that allows you to calculate your own price targets, see everything you possibly need to know about the company that you were considering investing into. And we even have features that allow you to follow what, the smart money is doing with all of their trades, whether they be insiders at the company or even members of Congress. So definitely make sure to check out that first link in the description and the comments down below. And thank you guys so much for watching.